Okay, hi guys, good afternoon. My name's Ian Coleman. I'm one of the analysts at traders at firstofTrading.com. Okay, we supply banks, hedge funds, professional institution and retail traders with analysis and trade recommendations for 7 o'clock UK Open. Today, basically we talk about price action a lot because, and especially for me, price action is foremost in my analytical toolbox, if you like. But it needs to be combined. As with virtually all analytical tools, anything that stands alone is not as strong as something that is combined with other retracement levels, trend resistance lines, and numerous different formations that we can look at. We can look at symmetrical patterns, which obviously look at a lot of fib levels. We've got crabs, butterflies, bats, Gartley patterns, free drive patterns, ABCD patterns, or ABCD patterns, which we've got up here on the DAX. And we want to look at price actions around these formations to produce buy and sell signals. Okay, it's very hard to get into a trend at the start, and by combining our fib levels or our trend lines, okay, we can look for price actions at very important areas of support or resistance, okay, or where the market's focus is towards. Okay, so we're actually going to start off with the DAX. I know we normally look at FX. We're going to start off with the DAX because we can then get the risk trade. Okay, are we buying into to areas of resistance? Okay, or selling into areas of support? Is this a good area to get short or long of the dollar? Okay, just going to close my door a bit. There's a little gale outside. Okay, and we break down time frames as well. Okay, we want to look at big pictures, so we want to look at weeklies, dailies, even monthlies at the end of the month. Okay, to get a feel for if we've gone too far, are we in a corrective sequence, etc., etc., etc. So DAX, I'm just going to break it down for a higher time frame first. Okay, we need the continuation chart on. It's all a bit messy up the top, isn't it? So we can see that we've had this very aggressive move up, and we're up towards previous highs. There's no trend line resistance, okay, but what we do have is this last leg, and it's pretty rough looking, but we've got 1, 2, 3, 4, 5. We put a fib extension on. Okay, we can see there's still some way to go, but if you believe in Elliott Wave or you're fanatical about fib levels, which I am, okay, then the fifth wave is always the hardest to predict. Okay, here, if we really did look at big pictures, we could say, well, this leg up is in 3 waves, which is corrective. Okay, this leg down is in 3 waves, which is corrective. So this last leg, according to Elliott Wave, can be in 3 waves or 5 waves, and again with the fifth wave the hardest to predict. So coming up into this last leg, we do look like we're forming a top, okay, or we're trying to get towards a high. Okay, we've got if you can see 4 weeks previously, we've got a pin bar which warns of investor indecision. Then we've got very choppy trading. Okay, we've got a bearish week, then a bullish week which virtually rallied from the open, and then another bearish week. Now these are common in corrective sequences. Okay, because it's showing investor indecision. The market's swinging from one to another. Okay, one minute everybody's on the buy side, next minute everybody's on the sell side. Markets are pretty illiquid at the moment, which we all know. Bank traders, institutions are not being allowed to trade as aggressively and build very large positions, which we also know. Okay, so it's only taking a small amount of news to get the market moving. Okay, and then we want to break it down. So we've got potential high. Okay, and then we want to calculate wave sequences. It looks a bit messy at the moment because obviously we need to break it down onto a shorter time frame yet. So when we say that we want to get price action around fib levels, okay, and around support and resistance levels, what we're looking for in price action, or what I look for, is complete outside bars or complete inside bars. Okay, so an outside bar isn't just an engulfing bar, it has to take out the full range of the previous candle. So here, on this low here, this daily bar, okay, takes out the whole range of the previous candle, and that's why it's highlighted on this on these CQG charts. Okay, here we've got indecision. So this inside bar on 24th September shows investor indecision. Now the way that you can break, the way that I look to trade it, is you either trade the break or you trade a shorter time frame that close below the break, okay, on an engulfing on an inside bar. So here we've got the inside bar, the low is at 73.90. So you'd look to trade, or I'd look to trade, an hourly close below 73.90. Okay, the stop above the inside bar, okay, and then look for the downside pressure. Okay, an inside bar, until it's taken out, that's all it is. It's indecision. It's nothing else. It's just, and at the moment the market is full of indecision. Okay, so we then get the move down. Now we know that markets don't just move in one direction very often, apart from when we had the big crash, of course. Then everybody bought the dollar, but they have a tendency in corrective sequences. Okay, we need to see a lower high, so we need to see a lower low, and then we need to see a lower high, and this is our low. Give me 1 second. Let's let the dog in. Trading partner. No way to talk about Steve. So we get this lower low, okay, and then we move back up, and at that point, when we've got our next swing high, we can then calculate a full ABCD formation. So we take the high, 74.83, we take the low, and we calculate the length of that trend. Okay. I can't listen to your voice. Everybody else can hear me okay, can't they, guys? So I wasn't looking at the chat there. Yeah, everybody else. Okay. See if Vicky can maybe deal with that. So then we want to take the length of this formation, and we calculate it from the next swing high. Okay. So we've got the next swing high coming in at 74.12, and I've already done the calculation, obviously, on this pair or on this indice. Okay, and it's a full ABC sequence is 71.38. Okay, so I then want to be trading my view. My view is that this corrective sequence, as it stands, as it looks at the moment, should be moving lower. Okay, but do I want to be selling it at the moment? Well, just zoom out a bit. We've had a bullish outside bar, which, as I've said, price action takes precedence to everything else. So we've got a bullish outside bar at the bottom. We've moved higher. Okay. Then we've got an inside bar, but it breaks to the upside and moves higher. So would I want to be selling into this at the moment? Well, only if I get a good signal, a good bit of price action that confirms that the downside bias is back on. Okay, and all I'm doing here is then just breaking down the time frames. Okay, so I then go into the 4-hourly chart, and again, massive bullish candle yesterday. Okay, and the price has moved up, but where has it moved up to? Well, I've got 61.8% coming in here, which is the retracement, okay, of this subwave down, okay, and this subwave, again, I can see it in 3 waves. So I've got 1, 2, 3 here. Let's just explain them. So they're all looking corrected, and all of these waves, all the previous waves, sorry, let's just clear that off, and all the previous waves, what's going on here? Okay, can all be counted in 3 waves. 1, 2, 3, 1, 2, 3. Okay, 1, 2, 3, 1, 2, 3. So they're all subwaves. Okay, and on the 4-hour chart, it's an aggressive sell-off, and it's a choppy sequence back up in 3 waves. Okay, to 61.8% retracement. So again, do I want to be selling it? Well, I've got a spinning doji there. That's showing huge investor indecision. It's closed the gap from this morning, which the market has a tendency to do. But where is there anything else that lines up? And again, we want to calculate the formation, and the ABCD formation on this leg comes in at 73.23. The high is 73.26. So I'm combining all of these ideas, okay, and all these different projection and correction levels, okay, to get to a point where I can get into a trade, and I can get into a trade tight. Okay, you have to be tight when we're trading. We've got to be looking for decent risk reward. The reward is all the way down here. Okay, 71.38. So what have I got? I've got potentially 200 points with a stop of 25-30 points. Okay, so the risk reward is good. Now on the 4-hour chart, it's showing indecision. We're forming an inside bar as we speak. Okay, got to wait. Unfortunately, it's 11 o'clock bar. Not going to close until 3. But it's showing indecision. What's it also showing? It's showing that gains are being rejected. Okay, forget about the dip now. Okay, it's showing that gains have been rejected. Go on to the hourly. Okay. Decent sell-off, pullback, inside bar. Okay, so we can then get in even tighter. Okay, if this bar stays an inside bar, we can then sell the break and stop above the outside bar. Okay, and again, you know, we're going to get what 07.22, so potentially a 15-point stop, and potentially a decent, very decent reward to the downside. 20 to 1 risk reward on a straight trade. Okay, and you can even go as far as breaking it down again and really look at sort of inside formations. Okay, I won't go all the way down to 5 minutes, not for a signal candle. But I look to 15 minutes, I look to 30 minutes, okay, I look to hourlies, 4 hourlies, and then I use very short-term candles to try and gain my entry. Again, not great on 15 minutes, sorry. And again, 30 minutes, not great, just showing an inside bar at the moment. Okay. Have we got anything else? Not really. Got a bit of divergence. Okay. This indicator, the RSI, is flat, while the market makes a higher high. I'm not mad about divergence, to be honest. So we're waiting for that break. Okay. So we're using price action. We're using in this scenario an ABCD formation. Okay. we're using a bigger time frame forecast, okay, to produce a trade that gives us very good risk reward, and that's what we need. That's what we want. We don't really want one-to-ones. We want decent risk reward. Any questions on the DAX, and then we'll have a look at currency pairs. Very wary of euro dollar around 130 at the moment. Obviously, that will be the first one that we're gonna look at. Okay. Any questions at all, guys? Nope. Okay, let's clear this off. Weekly. Oh, what a mess, eh? Let's break this down. Remove all studies, and then we can have a go at it. Okay. I should say to the guys that haven't been to one of the webinars before, the chart formations that I have on, I have an Ishimoku cloud, which I only really use off sort of dailies and weekly chart formations. I have these are CQG charts. The yellow boxes highlight to me different chart patterns, okay, engulfing Morningstar formations, etc., etc., etc. The RSI on the down below is on a 15 setting. I use that purely for trend, okay, and the ATR. The ATR, I really want to see, again in shorter time frames, that turning points. I want to see aggressive candles. If I get an inside bar, it shows me indecision, okay, and the bar that comes after the inside bar, I want it to be aggressive, okay, because I want the bears or the bulls to have taken control. So I want that inside bar to stand out from the crowd, if you like, okay. In my bullish or bearish engulfing candles, the same scenario. I want that bullish or bearish candle to stand out. What is the smallest time frame you enter on? 1 minute. In my personal trading, but really, to be honest, 5 minutes is more often than not the candle that I will use to get in. It's not my signal candle. That's what I should say. My signal candle is 4 hourly, 30 minutes. The lowest I'd ever go down for a single candle is 15 minutes. And by signal candle, I mean inside or outside bars. What are the 2 RSI settings you have? 2 RSI indicators on your charts? No, it's just one. Sometimes on the other charts I do have 2 RSIs. I'm quite fanatical about fibs, as we were going on about, and even my moving averages are based around Fibonacci levels. So the RSI is 15, okay, and the ATR is just an ATR, and that's on the 15 as well. On some of the other charts, I do have 2 RSIs, and the other RSI is an 8 setting, and for that, basically in symmetrical patterns, I want to be overbought or oversold, and that's as simple as that on the 8. Okay, so euro dollar, beast that it is lately. Okay, let's break down the big picture. Fib extension tool. Your extension tool should have the following settings. Okay, it should have 127, it should have 161.8, it should have 261.8, and it should have 423.6. Okay, 423.6 being more common in commodity pairs and commodities. Okay, we want to watch price actions around fib levels. as I've said before on previous occasions, I'm not fanatical about Elliott Wave, but I do look to wave formations. Okay, and the reason I'm not fanatical about Elliott Wave is because so often we will get an overlap of waves. Okay, and you know, if you're a stringent or a very strict Elliott Wave theorist, then that breaks the count, and I find that more often than not, the market will still run to 261.8 even if it has broken the count. I know other hardcore Elliott Wave theorists will turn around and say, well, that's not a 5-wave pattern, and that's a 3-wave pattern, etc, etc, etc. So here, first swing, okay, down, okay, second swing down, and then down to here, and we can see at turning points we can get bias off this higher time frame. Okay, the first one's the hardest, and we get the swing high and engulf here. We then get a doji, okay, at 161.8% and cloud base, which I said I'll look at in dailies, but we only move up and spike out the top of the cloud. Okay, the bias with cloud formations, if you're inside the cloud and you've come in the cloud from the top, the bias is still bullish. Okay, if you come in the cloud from the bottom, the bias is still bearish. It's only when she breaks out of the cloud in the other direction that the bias changes. Okay, and a lot of the time we will get a retest of breakout levels. So when you think about wedge breakouts, channel breakouts, etc, etc, especially on wedges, the market will have a tendency to retest the breakout. Okay, and it's the same scenario for cloud formations. A lot of the time when we get the breakout, the market will retest the breakout, okay, to see if it's firm. And here on this breakout of the cloud, we get a retest. Okay, inside day, another inside day. Okay, so it's showing massive indecision here around the previous low, and then we get the break. Okay, and the market moves lower. Morning star formation, market moves to the upside. Inside bar, engulfing, market moves to the downside. Another engulfing bar, market moves to the downside. Inside bar, correction back up. Okay, bullish engulfing bar at or very close to 261.8%. Okay, this is a history lesson. We don't want history, but history does enable us to forecast where it's going to go in the future. Okay, virtually every indicator that I put on my charts is a forward-looking indicator. Okay, it's not looking back. The EMAs that are on the chart, okay, are used as support and resistance or target levels. The RSI, 50, above 50 bullish, below 50 bearish in its rawest form, but it works as support and resistance, as we can see here. Okay, so it's a forward indicator. The cloud is a forward indicator. Trend lines are forward indicators. Elliott Wave retracement levels, Elliott Wave extension levels are forward indicators. We want to know what's going to happen, not what did happen. Okay. So getting back to this euro-dollar pair. So if we've had 5-wave sequences lower, then we should at least expect a 3-wave sequence higher. Okay. Trend channel. Take the high, take the low, and then we come back down. So we had this trend channel, okay, which we broke to the downside. So that has got rid of that formation, if you like. It's no longer valid. But we can see at the moment we're getting squeezed in between these two EMAs. Okay. The weekly chart, that is not an inside bar. Okay. So we can't count it, but this one is. Last week is an inside bar, so it's showing investor indecision at the moment for euro dollar. So we break it down again through time frames. Okay, and here okay, we get our 261.8%. So the move up And again, looking to price action. Okay, this was our down the bottom. Remember, we had our this is our engulfing weekly. It gave us the base. Now we can then use pullbacks because we know that the market has got to post a higher low for the wave sequence to be broken. Okay, so it moves back. You then get a huge engulfing day. Okay, market trends lower, and then we get engulfing candles. So we want to be taking our bias off the buy trades, okay, off the bullish engulfing trades at fib levels, at retracement points, etc., etc., etc. Okay, so bullish engulfing, we move to the upside. We break out of the cloud with a bullish engulfing. Okay, inside bars showing indecision, but we don't break the engulfing candle. Okay, the engulfing candle here is still alive. We don't break to the downside. Okay, and all the way up we continue. We get a few areas of indecision. Okay, but the bulls keep on taking out this indecision until we get to 261.8%, and we get an inside day, okay, at the high. At that point, we're extremely overbought. Okay, we've had a massive rally. Didn't really stop at fourth wave, or the fourth wave was, if you are to count it, was overextended. Okay, and then we pushed up. So where can we expect the retracement to come down to with when we combine it with price action? Okay, just clear that off. And get rid of the fib extension because that is now finished, if you like. Okay, and then we want to use the retracement. Now, in most aggressive rallies, the retracement will only pull back to between 23.6 and 38.2%, because the smart money is released, was cashed in, if you like, and are then building or looking to build long positions on the way back down. I'm still not convinced that this rally is going to continue from here. Okay, but what we do have, and you can't ignore it, is we've got a base coming in here. Okay, we've got an engulfing candle on the 11th, which was last Thursday. Okay, and the market has been buying dips. Okay, so we've bought the dip and we've moved higher. Now this is the point where we want to, if we are still bearish, and I am, trend, I want to be looking at areas to sell into. Okay, and I also want to be forecasting where I expect it to get to. Okay, so we've taken out 23.6. Use a horizontal line. Okay, this is 38.2. It's also my EMA. Okay, and if I look back, it's an area of support resistance. So engulfing, small correction. Okay, market moved lower. This then became resistance. Okay, because it was support, then resistance. It is now support. Okay, it's been broken, retested here on this small move back, this inside bar, and then the market rallied up. So it is now support. Any other reasons that I think that the market might be able to move back to that level? Well, yeah, quite a few actually. When we remove this to start with, and then we break down into shorter time frames. 240. In fact, I've gone too early. Not on analysis. That's not what I meant. I meant on the forecasting. Text. Okay, what's my high? 131.72. 131.72. So I'll just make a note of that. What's my low? My low is 128.03. Okay, what's my high here? 130.74. Okay, so I want to calculate, doing all of this for risk reward to make sure that I'm going to get enough pip counts out of it to actually make it worth putting on a trade. Okay, so 369 pips from this swing high to this swing low. Okay, now I then want to take 369 pips from here for an ABCD formation. Okay, so 130.74 minus 369 pips, 127.05. Okay, where is that? Extremely close to this area of support down here. Okay, so I'm suddenly getting a picture that this could be a larger correction. Okay, I've got support here, I know I have, because I've posted an engulfing candle, but this still has the potential to be a triangle formation, okay, with spikes through this 128.54 support level. So again, breaking it down, do I need more confirmation? 40 minutes, okay, break it down. Okay, this move lower was a near perfect ABC formation, choppy, erratic, common in corrective wave sequences. Okay, inside bar, back up. Is this move back up in 5 waves? No, it's not. It's in 3 waves, and the inside waves are even in 3 waves. Okay, 1, 2, 3. 1, 2, 3. Okay, 1, 2, 3. Even this little piddly one here is in 3 waves. Okay, and these are in 3 waves. So 3 waves, 3 waves. It's not an impulsive formation. Okay, if we're looking at wave formations, it's not impulsive. This wave down, you could argue it's in 5 waves, or you could argue it's in 3 waves. We could say 1, 2, 3, 4, 5. Okay. Sometimes you do see what you want to see, but I see 3 waves, 1, 2, 3. I see this wave in 3 waves, 1, 2, 3. Okay, so I hope you're starting to get to grips with the impulse and the corrective. Okay, the impulse waves need to be strong, very bullish to the upside. Have I got a signal here to sell? No, I haven't. Okay, I've got a trend line resistance. Okay, 4 hours is showing me a bit of a lot of indecision, spikes to the downside being bought, but also rallies to the upside being sold into near the trend resistance. Okay, so I then want to break it down again. Okay, you can see here. Okay, this just looks like a three wave formation, and this last leg is by no means in 5 waves. An inside bar we're posting, indecision at a trend. What have we also got? Well, we've got 130 the figure. Everybody talks about 130 the figure, so we've been attracted towards 130 the figure. Are there sellers waiting around to push this back down? Well, we've got a bias in DAX, or I've got a bias in DAX that says the DAX is overcooked. Okay, let's have a quick look. Just flip it back. What a thought. Okay. Still getting indecision. Okay, in the DAX. Still inside bars. That's the 30 minutes anyway. We want the hourly. Okay. So we've got an inside bar still being posted. We haven't taken out 61.8% yet. Notice I say yet. So again, where's my signal to sell if I want to sell? And I have to wait for the signal. If I don't wait for the signal, then I'm not trading to a system. If you don't trade to a system with tight money management, then you're going to lose money, because you can continuously move your stop to try and keep hold of your wrong trade. Okay, you've got to put it on, you've got to place it, you've got to leave it until it hits your first profit target or it hits your stop loss. Otherwise, you know, all the analysis that you've done is just a waste of time. So we've got the low here, okay, 128.91. Okay, high here. Some chart formations or some chart packages, I can't believe that CQG doesn't do it actually. Well, actually, you can just draw a line from a swing high, swing low, and then mirror it, and it'll show you the bang on point where you've got to be. 129.29. It's feeling a bit worse for wear today. So we've got 129.80. Fat fingers. 129.80. 128.91. 89 pips onto 129.29. 130.18. What's today's high? 130.20. So I don't want it to break. Okay, I need to watch this 1 hour candle. If I still get an inside bar, okay, then I've got an ABCD formation on a larger time scale, okay, on the daily. I've got superb risk reward because I'm going to be looking at 20-30 pips stop and a target of 250 pips. So, you know, I'm getting over the sort of the 10 to 1 mark or thereabouts. And if it breaks this high, if it breaks this trend, then my analysis is, good chance my analysis is completely wrong and it's going to keep on going. Okay? It's all about chart formations, trend, taking time to analyse the big picture, and then looking at shorter time frames for confirmation. And you have to get that confirmation. If you don't, don't try and forward think the market. Okay, the market is too big. 5 minutes. I don't think she's going to hold. You know, this move down was nice and aggressive, quite impulsive. It was actually off 18, I think, 16. But the move back up has also taken out this high. Okay, so it's invalidated that that counts. But we're still posting an inside. Really going to need to see a break at least of sort of 130 the figure. By the way, these levels here, these lines here are market profile charts. Okay, this is what they call the point of control. So that is where the calculated area that the market is happy for euro dollar to trade around. Okay, and that really wants to be your sort of first point to attack. Here is your value area. Okay, the green is the top of the value area, and the red is the bottom of the value area. And what market profile basically says is a break and close back inside the value area, and it should move back to the mean. Okay, and the mean is the point of control, 129.64. And these are constantly moving until obviously the day closes. So if it moves higher, then obviously this value area moves higher with it. And I've been taken out. Okay, the inside candle is no longer an inside candle. Any questions about euro dollar or about what we've been talking about? Yeah, these are all within the same day. Okay. Obviously, sometimes if you get a decent ranging day, like here, and obviously the value area is large. The value area is basically where 70% of price action traded that day. Okay, the point of control is basically where money was happy, or smart money, as they say, was happy for euro dollar to trade around. And it's also where the most volume, okay, where the most trades went through, which basically dictates that is your central. I think this is going to be a false breakout, but so basically what I need to look at now. So I've got a 15-minute inside bar. Okay, so I need to look at indecision, and at the moment we're not getting any. Okay, quite a decent bullish breakout actually to the upside, but I'm not short. Okay, so if I'm not in it, okay, you've got to be in it to win it, but I'm not losing money at the moment because I haven't put on the trade. Any other questions? Or any questions? Would this be a step before 1:30? Stop. Too late for the day. Well, not too late for my day. I worked till about 9 o'clock. Two moving averages are 15 and 62 EMA, exponential moving average. Okay, let's look at some others anyway. Let's break some others down. Let's have a quick look at the DAX. Still getting an inside bar on the DAX. Okay, so that's not broken to the upside. Okay, that's 60 minutes anyway. Okay. Cable. Okay, cable. Decent move higher. Okay. Didn't get to 261.8%. Just take these off for a sec. Come on. Okay. Trend line. Okay, so we've got a trend of weekly lower lows, okay, which broke to the upside, but when we couldn't break and close, okay, above a previous high. So weekly doesn't really give us much of an indication at the moment of where this pair is going. I am a long-term bull, but I'm a bit of a short-term bear. I'll explain why. Okay, so we've had a correction off this high, starting to go a bit now. They're all starting to go a bit. So about the correction from the high. Now, this is obviously the last leg up, okay, and it overextended 161.8%, which we saw, okay, but when we go for inside legs, sorry, okay, we can see here that 261.8% off this swing, okay, lined up with the high, with around 163.03. We then got a very large pin bar, but trading choppy to the upside. Okay, we spiked down on a few occasions. This would have given us a bit of a false start because we're towards 261.8%. We get an inside day, we then break to the downside. Okay, we do get some follow through, but it's not the high. Okay, it doesn't confirm the high. What happens is we spike up, then we get huge rejection, okay, and at that point the bias is probably confirmed to the downside, but it was a bit of a false start. So that's 261.8%. Remove that off. We then put our fib retracement tool on. Okay, 23.6, 38.2. So again, we've broken 23.6. We want to put a line on 38.2. This looks to be an expanding wedge formation. Okay, so an expanding wedge formation has a bias to break to the upside. So I think this is a third wave extension, a retracement in 4, and we will break up to the upside. I've got to wrap this one up. Vicky's just saying that sorry, that we've run out of time. The 2 forwards, you see, I see this as a bit of an expanding wedge formation, like I said, and it has a bias to break to the upside. But this price action from here does not look impulsive to me. Okay, we had a triangle formation, we broke out, we actually bought the dip back, we got an engulfing candle, market's been choppy since. This is impulsive, this looks corrective. I still think, and I'll still look to 61.8% and possibly even 78.6% for signals of a reversal to take us down and finally take out 159.65, which is the fib retracement level. What if someone puts both those RSIs in the same panel and considers their crosses as possible signals? Yeah, you could do. You could try it. I've never overlapped them, but you could have a look. Okay, guys, I've got to wrap it up. Vicky's just saying that it's time to go, I'm afraid. I hope it's been educational, and I hope the information that we've given you ends up making you more profitable. Okay, good luck, guys, and I'll speak to you again soon. Thanks very much.